Hello, folks. Brandon Chapman with you today. It's a video for TheoTrade. It's St. Patrick's Day, March 17th, and so it's interesting. Are we talking about a pot of gold at the end of this rainbow? We're seeing the market decline, roll over here, but the last couple of days we're seeing a bounce, or are we really seeing that the market is just basically in a bear trap and likely to see further downside in the near term? But anyway, so we're looking at the S&P right now. We're seeing we're up about 0.74%. If we look at the various sectors, we look at gold. I mean, gold's only up 0.5%. Our leading sectors are real estate and energy and staples. Not exactly, areas that say, hey, this is a really strong and a very bullish rotation out of this. It's actually the exact opposite. I mean, real estate's bouncing today because, if we look at bonds are finding a bid here. We're seeing that real estate's feeling kind of a relief rally, kind of an expectation. I think bonds may have a moment in the sun coming up. Energy right now, of course, we've got issues with Iran, and we got the Houthis and all this other stuff that's going on. And so again, we're talking about a little bit of saber rattling that's creating higher energy prices, higher oil. Well, if we look at oil prices today, oil is kind of falling off our highs a little bit, but at support. We could look at, Bitcoin /BTC. A lot of news talking about, they got to buy Bitcoin, the Bitcoin Act, yada, 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 how that might be bullish for gold. We're revaluing gold, all this other stuff. But at the end of the day, I mean, gold's down here right next to utilities as the worst performer. And you'd think, hey, if bond yields are going to come down, shouldn't that benefit utilities the most? But utilities had a nice little couple of days here. So we're off the lows a little bit more in utilities. So why not bid up something else like real estate that was more heavily sold going into the end of last week? Well, there's the bell, folks. What do we have last week? We look at the dollar sign UVol. This is up volume on the S&P 500. Dollar sign DVol. This is down volume. And I'm creating a ratio using the pairs ratio study set. And what does this do? We saw on Friday, we saw that up here, if you look over to the left-hand side, we're above 9. We saw greater than 9 times more volume on advancing stocks than declining stocks. When was the last time we got that? Well, back on the 23rd of August of last year. Go back, even back further. We can kind of go back here. Well, that's actually kind of a bearish sign. It's not a very good sign, though, right? Either way. And so when I look at this, I'm saying, wow, what we have here is we saw a very lopsided day on Friday. We saw on Thursday, we saw some high beta stocks start to pick up. I mean, kind of see here that kind of saw on Friday, we saw a nice little bounce in high beta. If you look at SPLV, you kind of see, again, we saw a nice up day there in low volatility stocks, but high beta leading, a little bit of short squeeze. And now we're seeing a further move here today. But now all of a sudden we're seeing what? 1.46%. We're seeing 1% in low vol. Or low beta stocks. We look at high beta names, we're up 1.6%. So what we're seeing right now is there's a bit of a squeeze going on, right? We're seeing some movement to the upside. But the question is, where's the next 10% going to come from? Are we going up or are we going down? Well, one of the areas we know where the market's betting on, at least for today, and it's been an area we've been looking at for a while, is Chinese stocks. So if we look at FXI bottomed back here on the 10th. In my sessions here at TheoTrade, we're talking about BABA back here on the 8th from a valuation standpoint, from a potential rotation to value, rotation to China. And then we got up here back to prior highs. You're thinking, well, how much more can we get out of this, right? Well, we got a lot more out of it. In fact, today we're breaking out to new highs. Baidu, these are big components within China. Baidu up 9%. Why? Well, it goes back to Chinese stimulus. We have another plan to stimulate China. Well, how many of these plans have actually worked? None of them, right? I shared this. I had my brother on who lives in Asia, lives in Japan, travels Asia, has businesses and suppliers and all across Asia, and has been there for 20 years. And he was telling me that he was in Germany for an event. A lot of Chinese manufacturers there saying, he's like, I hear youth employment in China is 25%. These manufacturers saying actually it's probably closer to 50%. The fact of the matter is central planning printing of money, expanding debt, lowering reserves, all this other stuff that is intended to stimulate, it has to be productive. But unfortunately, it's not productive there, right? It's very organized, it's very directed at specific parties to be successful. There's very little incentive to be profitable, to have these actually be productive ventures. So they fail over and over and over again. Look at the last 3 years. Every time we have a new plan, optimism comes back around. Optimism comes back around. Optimism, and it comes back around. What we're watching for right now, or what I'm watching for specifically, I'm looking at the Chinese yuan against the dollar. Right now, it's stable. But look what happened last October here, right? Beginning of October, we started to see the yuan devalue against the dollar. And as a result, Chinese stocks sold off. This is last October right here. I'm expecting the exact same thing. When the signs of the stimulus have failed, which are probably going to come fast, we're going to see Chinese stocks come off hard. But it doesn't mean that they're ready for that. It seemed like we were. And if we look at, for example, K-Web, it seemed like K-Web was ready for a sell-off right there as we broke the trend line the next day. Right there, we had some significant prints, bearish prints in K-Web. I put on a bearish trade right here, just looking at the downside with limited risk. And then boom, we broke out. We're breaking out again. All on the anticipation of stimulus. But it's ironic that they're talking about expanding monetary policy, right? Expanding the amount of yuan in the system. And that yet here, Secretary Bessent, Treasury Secretary Bessent saying what? We're going to take more of a more sound monetary policy. We're going to take more of a measured approach. We're not trying to go in as much debt. We're trying to curtail spending. All these things should be bullish for the dollar as the amount of dollars in the system start to diminish. But it's also leading to the fact that people are pricing a recession, the fact that, hey, the Fed's going to cut rates sooner. We're going to go back to the same trough we did before. People don't believe it. But the reality is, if we truly start to see significant weakness in the S&P 500, what does that mean for the market and what does it mean for the dollar? At some point, the dollar is going to be strengthening because of what? There's a lot of foreign denominated debt, and the demand for dollars is going to spike. It's just not happening right now. We look at $DXY, the dollar index. This is the dollar against the euro. The dollar's selling off here. There is no strength in the dollar right now, and you can see it in gold prices as well. Look at GLD. GLD's up 0.5% today. The dollar is losing value, and it's also losing value, as I just showed, against the Chinese yuan. And as a function, there's some near-term optimism right now that, hey, maybe everything is okay. But the realities of this, the yuan's not strengthening as much as it did in August and September, and the potential devaluation could be much more significant. But we come full circle to the fact, the quandary, what is going to happen with regards to the market? And as we're looking at right now, Chinese stocks. Well, guess what? We have a bit of an answer today. So today's option prints in the Chinese space, ASHR, the 28 March 25, 29.33 calls being bought, verticals, right? So we're buying the lower strike, selling the higher strike, which works in these products because call volatility is rising as you move out of the money. Walk through that today in my session. Baidu, they're buying the same expiration, 100, 105. FXI, 21 March 25, 38.50 calls. 31 March 25, 38.50 calls in FXI. Pinduoduo, PDD holdings, right? This is your, oh my goodness. This is your like buying crap for cheap, right? Giving away stuff for free. What happened to the de minimis exception here, right? Well, anyway, we're talking about Temu. But then we got Crane Shares, we got K-Web, your internet Chinese ETF. Well, again, buying 38 calls. This is one of the most breath days I've seen as far as all of these various long bullish trades in individual ETFs and individual stocks. There's probably more out there, but the reality is this is what we're seeing right now, right? And as a function, this creates something like called gamma. What is gamma? Well, if you have a surge in buying calls in FXI, well, who's selling those calls? It's the market maker. Well, if the market maker is selling calls, thousands of calls, maybe tens of thousands of calls, And who's going to buy them, right? How are they going to offload those? Not very easily. So what are they going to have to do? They're going to have to hedge. How do they hedge? They buy stock. So now all of a sudden you have a bunch of people rushing in to buy call options. Market makers are selling them. They've got to hedge by buying stock. And this is where we stand right now with the big moves today in China. Okay. So again, as you go around, probably a dividend and ASHR, but again, we've got Baidu again up 9% today. We have KWeb, we have FXI, and you can go down the line. And so the idea is, how do you play China? Well, look, the volatility has continued to expand as the price has gone higher. This is generally not good, right? So we look at the lows down here, right? We're down at an ATR of about 50 cents on FXI. We're at 90 cents. And even though we've been consolidating, again, we even saw volatility expand further, come in just a teeny bit, and we'll probably see it expand here in the near term. And so as volatility is expanding, as price is going higher, this happens when your things are getting unstable. You look back here, for example, go back to, for example, in May, volatility is expanding as price is going up, and we've got a last gasp here before eventually we came down. So are we in the last gasp? Yes. How long is this gasp last? How long can we hold our breath? I don't know. But today it says that we're still going to hold our breath, and maybe for this week. And so I walked through this earlier today, and prices have moved. If I unlock this, it's at 88 cents. It was 84 earlier today. But right now, the 38 strike has an implied volatility of 34%. Well, 39's at 34.8, their 40's at 34.15, 50's at 35. Things have shifted here a little bit. But the point is, you can buy 55 cents in the money and sell a 40. You've got about at 97 cents in this one, right? That's reducing the cost and improving your probabilities. And all of a sudden, you're into this for 88 cents. Well, if you could close that out for $1.30 this week, do it, right? It's probably going to take it moving to or through 40 here, but you could get there pretty dang quickly with an upward move. And right now, at least for today, you have the option trade at your back. But again, it's just saying, look, your risk in this case, you're risking 88 cents. Is it worth it? Well, guess what? If we go back to, for example, right here, you had a decline from 36 to what? 37 to 33.50 in one night. Would it be unsurprising to see a 10 to 15% move overnight on a drop? No, right? Because that's the risk if the Chinese yuan starts to really devalue against the dollar. That's what we saw back here, and it quickly found support and began to head back up against the dollar. But at some level, at some point in the near future, we're likely going to see the dollar strengthen, probably against more currencies out there, and we're probably going to see even increased pressure on the market. And we might finally start to see that correlated selling where 90% of stocks are declining on 90% or more of the volume. That's a 90% day. But it may not happen this week. Maybe it's next week. Maybe it's the week after. But for right now, there is a small window to take advantage of the potential move, bullish move in Chinese stocks this week. And again, do you want to buy shares when it might drop 10, 15% overnight? Or do you take a swing at the option side? It's up to you. Again, I'm kind of giving you both examples here. But in this case, doing the option trade, we're looking for just above 40, closing it out at about a 50% gain. Well, folks, that's all I got for today. We'll catch you back in next week's video. You have a great one. Thank you.